So we're going to look at a brief history of network effects being created. We're going to talk briefly about network effects. I'm going to share some examples of trends and opportunities, and then a quick background on what we actually do at the GDA group. So I'm a serial entrepreneur and investor. I've never really been employed. I've been starting blockchain businesses since I was in university, initially creating the largest university networks, then the largest blockchain-focused advisory firm. My clients were organizations like TD Bank. Now with the GDA group and GDA Capital, we are investing into creating the world's largest networks. So a brief history. This is a really cool anecdote that I saw a few years ago, and I like to share. This is a picture of Fifth Avenue, which is the main street in New York City in 1900. And not only is the picture in black and white, but Fifth Avenue is 99% horses. There's a single car in that picture. I'm guessing that nobody can point out that car. And then 13 years later, the same street in New York City is 100% cars. There's a single horse, which you might be able to see. It stands out a little bit more. But the cool thing about that is that it took 13 years for disruptive technology to go from virtual 0% adoption to just about 100% adoption. And now obviously Fifth Avenue is actually 100% cars. So you can see in 1900 there was a single horse-drawn carriage, and in 1913, or a single car, and in 1913 there was a single horse-drawn carriage. But what's interesting about network effects and disruptive technology is that the disruptive technology curve is getting much faster. So if you looked at a concert before 2015, there would be no cell phones. If you look at a concert after 2015, lots of cell phones. So the disruptive curve for cell phones at concerts went from virtual non-adoption in 1 year to just about 100% adoption the following year. If you look at the trends for digital asset or for disruptive technology adoption, they continue to get steeper. Until now we're able to create networks of billions of people in months, like the example of Angry Bird or WhatsApp. Simply put, considering digital assets, the value of the token ecosystem is often directly proportional to the value of the network. And the value of a network is the squared number of the value of participants in that network. Obviously taking into additional consideration things like the value of each participant in that network and the amount of engagement of each of the participants in the network. But generally speaking, the value of a network is the square of the number of participants. An interesting anecdote that I like to think about, or I like to share with regards to the speed of growth of networks, is the story of the creation of chess. I wonder if you could raise your hand. Does anyone know this story? Cool, okay, a couple of you. So the person that created chess hundreds of years ago was offered by the king of the time a reward for having built a pretty cool game, at least in my opinion. And that person decided to request just a single grain of rice on the first square of the chessboard, and then requested that grain of rice be doubled every day on each following square of the chessboard, which seemed like a small number at the time. And actually the first half of the chessboard was a small number. By the end of the chessboard it was only about 100 kilograms, which is not an insignificant number. But the doubling properties of networks or of rice meant that by the final square of the chessboard, this pile of rice was the size of Mount Everest, and the guy was killed by the king. So network effects continue to get faster because now with networks that are already built to create faster network effects for new networks is much simpler. So two trends that I want to talk about are branded digital assets and treasury supported digital assets. Branded supported digital assets are essentially a digital asset that is created by an existing brand. And most digital assets created today are created by a startup or a scale-up, a company that has just raised a seed or Series A round. What we refer to as branded digital assets or consumer digital assets are either fungible or non-fungible digital currencies that are created by a multinational organization. And traditionally, these multinational organizations have not been able to participate because if you're bringing millions of users to the blockchain, then Ethereum has not been able to handle that. But with additional scalability of new networks, and one that I'm very invested into and bullish on is the Digital Bits blockchain, being able to take those existing enterprise multinational networks and put them on the blockchain enhances the relationship between their users and their brand, and by association brings millions of users to the blockchain overnight. So why branded digital assets? They're digital assets that can be implemented into existing customer applications without their users even knowing that they are using a new type of assets. They could either be stable, so representing a euro or a dirham or a dollar, or they could be non-fungible, representing a gift card or loyalty points, which ultimately upgrades the consumer experience and creates higher value for the brands because they get deeper market insights and they also get massive lower costs. So for example, McDonald's has billions of dollars of capital that's locked in US dollars, euros, and dirhams, and pounds, and every currency in the world. They could collateralize each one of those treasuries on the blockchain to make McDollars, McCAD, McEuro, McDirham, which they could incentivize their audience to participate in with no balance sheet risk because it is just fiat currency. But the billions of dollars that they save from those assets, they can give value back to their audience in the form of cost savings or in the form of non-fungible promotions or whatever. We don't have that much time, so the ramifications of this is that as these multinational brands start to participate in the blockchain universe, as mentioned, is that there's significant adoption very quickly because these multinational brands already have millions of users. They are just not putting those users on the blockchain and not building customer interfaces that interact with the blockchain. But organizations like WeChat already have $10 trillion in payments and 900 or probably more million users now. If WeChat creates a branded asset that these users can leverage, all of a sudden there's 900 million more users of the blockchain. We don't have much time, so let's continue. The market intelligence of this is significant. So and for the users of these networks to directly support collateralizing multinational organizations' treasuries, that adds significant additional value for the enterprise than if you're using US dollars or euro or CAD or pounds or whatever asset, and also adds significantly more value than if an organization like WeChat or McDonald's starts to integrate or accept Bitcoins or Ethereum or an arbitrary digital asset that is not branded. So yeah, I think that ultimately branded digital assets are one of the things that will create mass adoption for digital assets. The second enormous trend that I see happening is treasury-supported digital assets. And the example that I'm going to share is the Axia coin, which is another network that we are very invested into and working with very closely. So Axia is about to be the largest digital asset offering ever. There's three primary components. There's a currency that is supported by an enormous portfolio of assets that are now publicly auditable on the Axia coin websites. There's the financial services ecosystem that has a traditional bank at the center of that ecosystem. So things like checking, savings, credit cards, loyalty points, remittances, collateralized loans, venture capital, private equity will all be done through a regulated financial institution. And then there's a Axia phone that has a native ecosystem of applications that are already built, that are coming to market, including a Facebook clone, Ax Connect, WhatsApp clone, Ax Chat, and 18 other applications. The value of this is because Axia is supported by real-world assets, which are arbitrary. So there's fiat currency, there's public equities, there's real estate, there's gold and commodities, there's art. It's a diversified basket. It's much simpler for it to transact along the traditional fiat rails. Plus, because it's acquired a bank, it can operate along its own financial rails. But it's easier, so there's already relationships to Visa, MasterCard, and existing financial incumbents. And so that it can be transactable like fiat currency, like traditional paper that we use today. But the paper, the currency, is supported by real-world assets, which is a much stronger value proposition to a big percentage of the world that don't have access to banking or that live in a country that has hyperinflated currency. And by the way, I think even countries like the US have hyperinflated currency if we continue to print this much money. And I am Canadian, but same thing in Canada, printing a lot of currency. So as mentioned, there's already cards. There's an Axia branded phone that provides, that has gift cards natively. So some of the organizations where you'll be able to spend your Axia coin and get rewards back, or organizations like Starbucks, Amazon, Walmart, etc. The Ax Chat is an example of the WhatsApp equivalent that is native to the Axia ecosystem that will allow you to transact or to send Axia payments natively in the application. There's a bunch of other applications that I don't have time to talk about, but yeah, so the GDA Group, we're an organization that is primarily focused on bridging the gap between institutional capital markets and the blockchain. We have a track record of putting a lot of assets on the blockchain, scaling organizations, scaling digital asset networks globally, and a lot of trading volume. We have an ecosystem of companies that are focused across the blockchain and digital asset capital market, doing everything that, or not quite everything, but about to be everything that a Goldman Sachs does. We have staff that come from traditional investment banks, traditional family offices, and some of the biggest businesses in the world. Yeah, happy to answer any questions.